Welcome back to Apidays India. We've heard a lot of things today about open finance, and we're going to continue digging into how this applies into the physical connected world in this connected commerce track. So, in addition to the open finance, today we also heard about some of the supply chain challenges from our keynote speaker yesterday, Namrata Mahindo from Aditya Birla Group. And to connect both of those aspects about very complex supply chains and also how to finance that, I'm very pleased to invite Manish Balani, the VP of Supply Chain Services Business at Vayana Networks. Welcome, Manish.
Thanks, John.
So, Manish, you're going to paint a picture for us about how to connect the financing of the supply chain.
Right,
Great.
John.
Over to you.
Thanks, John. So, hello everyone. Manish Balani this side. I'm the VP of Supply Chain Services Business at Vayana Network. I'll give a brief idea about what I do and what Vayana does, so that you basically understand what I'm speaking about. So, to give you a background about Vayana, we are India's largest third-party supply chain financing network. We are also India's largest GSTN authorized GSP. And when I say GSP, I mean a GST Suvidha provider, which is an API gateway for applications to connect to the nodal agency called GST network, right? So Vayana is promoted by multiple bankers, technologists, and global transaction banking experienced people. We just now closed our Series C, and we are now funded by institutional investors like Chirate Ventures, Jungle VC, IFC, Marshall and Wace, and CDC Group. We have offices in India in multiple cities, including Bangalore, Pune, Mumbai. So we have offices in India in around 10 cities. We also have presence in Singapore and US, and now we have forayed into UAE as well. So, if I talk about our business lines, there are two major strategic business units that we have. The first one is the supply chain financing business, wherein we are the largest SCF network today in India. We have in the SCF business, we have done more than $10 billion of invoice financing up till date. We are partnered with 25 plus financial institutions, both in India as well as in the international waters. We have done more than activation of more than 500 plus supply chains across 18 industries. We have done financing for more than 2 million plus invoices today, and in our network, you can find more than 150,000 plus enterprises. The other strategic business unit that we have is the supply chain services unit, which is basically consisting of all these services which we provide to the supply chain for which we are financing. So we have one unit which services the entire supply chain, while the other unit which finances the supply chain, right? So in the supply chain services unit, we have a neobank, we have an ARAP solution, then we have analytics in the supply chain services. We have GST analytics, GST e-way bill and e-invoice API services, and enriched API services for again GST e-way bill and e-invoice. So if I talk about supply chain services, we are the largest e-invoicing processor in India. Around 22% of the total e-invoices that are processed in India are through Vayana GSP. If I talk about Vayana GSP as a whole, Vayana GSP has carved out a niche for itself in terms of reliability, redundancy, speed of transmission, and a best-in-class tech support with the lowest pricing per API possible. From an infra or a tech stack perspective, we are on AWS India with geographical redundancy. We have an auto scaling and auto failover architecture, which ensures that we have a zero scheduled and unscheduled downtime. In fact, one major feat that we have is basically that we've been running from past 4.5 years with absolutely 0 seconds of downtime. We have processed more than 3 billion plus API calls, 1/5 of the total e-invoicing traffic in India, but still we have been up and running from past 4.5 years without even a millisecond of a downtime. In addition to that, we've been able to distinguish ourselves in terms of customer support and the understanding of API ecosystem and the domain. Due to such automated systems that we have developed and we have deployed onto our infrastructure, we've been able to keep a kind of an auto failover and auto scaling tech stack, as well as keep our pricing to the lowest possible number in the ecosystem. So today, Vayana GSP is the preferred GSP for handling India's GST, India's e-way bill, and e-invoicing traffic. If I talk about some of our esteemed clientele, two of the big fours are working with us. One of the largest US-based accounting software company called Intuit is working with us. We are SAP's silver partner, and around 75%, or I should say, 3 out of every 4 SAP corporate in India is using Vayana as their preferred GSP. So this is about what Vayana does, what the things that we have been doing. I presently take care of the supply chain services business. So let's move to the next slide. So today, let's first understand what we mean by supply chain. So supply chain means the series of processes in the production and distribution of goods from where they are first made, grown, etc., and until they are bought or used by the end user, right? So all your vendors, sub vendors, micro and small vendors, all your retailers, stockists, all your I would say OEMs, distributors, etc. Everybody forms part of your supply chain, right? So this is called supply chain. So your receivables as well as your payables are basically part of your supply chain. Now let's talk about supply chain financing, right? So supply chain financing, if I talk about the bookish understanding of the supply chain financing, I think supply chain financing is a term that can be described, that is to describe a set of technology-based solutions that aim to lower the financing cost and improve the business efficiency for buyers and sellers, which are linked in a sales transaction, right? So in a supply chain finance, you would find things like vendor financing, any kind of a domestic or cross-border financing, pre-shipment and post-shipment financing, channel financing, factoring, reverse factoring. All these things form part of supply chain financing. Now, what we have realized in supply chain financing is there is a physical supply chain and there is a financial supply chain. So physical supply chain, as I just spoke about, consists of your suppliers, your manufacturers, your retailers, and finally your customer. That's your physical supply chain. But then the financial supply chain is again reverse. First, the money is being paid by customer to the retailer. Retailer then pays to manufacturer, and manufacturer then pays to supplier, right? While the physical supply chain is sorted by the logistic organizations, I think financial supply chain is something that not everybody has been able to do it very well. So I think from a supply chain financing perspective, our aim should be to accelerate the GDP growth of supply chains by unlocking affordable and easily accessible trade credit for every member of the supply chain, whether it is the stockist or buyer or manufacturer, anybody, right? So by making trade credit available smoothly, we must also ensure that all the different threads of a supply chain remain harmoniously woven together. It should not be like that that the supplier is directly talking to the retailer or retailer is directly talking to the customer. It should be a simple chain which should not be broken, and everybody should be in this credit line which could be accessible very smoothly. Today, the problem that I see is that supply chains actually underperform because there is no affordable or timely financing that is available. And when I say financing, mostly the financing should be available to small and medium enterprises. Today, the traditional lenders find it very expensive to service these small and medium enterprises. Thus, the low cost financing is very difficult today. So, therefore, there is a need for a cutting edge digital technology with a deep human insight as well, which could make this lending very affordable, very swift, and very conveniently available to all the entities of supply chain, right? So supply chain financing is done. Now I think I should talk about supply chain service, because until unless there is a service unit which is servicing that supply chain, there are a fair amount of chances that the supply chain financing would not work in the manner it should work. So the supply chain service from an India perspective consists of e-way bill, e-invoice, GST compliance, business health monitoring through a score which can be called as good business score, and then invoicing accounts receivable and accounts payable automation, which we can categorize it as a neobank. Moving to the next slide. So today, every SCF platforms need to acquire customers, right? And that customer acquisition should be at scale. So a SCF platform can use the vibe model for acquiring customer, which means vintage, interdependency, brand pull, and existing business and credit. What I mean by vibe model is it should be flowing from the top, right? The larger organization should be supplying the smaller organization. So there should be an interdependency between A supplier and B supplier, or A retailer and B retailer. The brand pull happens when a large organization is doing the supply chain financing. So this is the Y model. Now there could be another model for customer acquisition, that could be referral based sourcing. There could be a large OEM, for example, a kind of an Hindustan Coca-Cola, that would be working as an OEM. Then there could be a supply chain of this entire OEM, which could be managed till the last mile. So there would be tier one dealers, there would be tier two dealers, then there would be a last mile supplier, right? So you have to use the referral based sourcing from OEM to tier one to the last mile, so that customer acquisition can happen at a scale. There are one to many relationships also in supply chain. A brand one, which could be a distributor, and there could be a brand one retailer. Now, brand one retailer can procure the goods from a brand one distributor, but there could be a one to many relationship also. A brand one retailer can also procure from brand two distributor or from brand three distributor, and similarly a brand one distributor can sell it to a brand one retailer, two retailer, three retailer, right? So every supply chain is very complex. One to many relationships are there. So we have to understand this relationship, and then after understanding the relationship, it can be serviced as well from a trade financing perspective. Uh, what we at Vayana have been able to do is that we have been able to provide end-to-end service. We provide a good business score for underwriting and monitoring. We provide digital onboarding and transactional platform, wherein all the transactions are happening on one platform, and those transactions are then financed by a financial institution. Settlements can happen through a nodal account. So all these things can be used as an end-to-end service platform for any supply chain financing to be successful. Now, coming to MSME financing, I think MSME financing is an iceberg that is needing a very different approach. If you see this image, there would be a large corporate, then a tier one partner, then a tier two partner, and then a micro enterprise, right? Today, if I talk about statistics, there are the formal financing that is happening per month in India is around $43 billion, while the unmet financing is more than 100% of what is being financed. So $57 billion is the unmet financing, and majorly micro enterprises are not able to get the financing, right? So servicing the $57 billion of unmet financing, the approach has to be top down. The large corporate needs to finance tier one dealer. Tier one dealer has to do it for tier two, and tier two has to do it for micro enterprises, right? So on the back of the 43 billion formal credit that is being given by banks and financial institutions, this has to come from a top down approach, and it has to reach the last mile micro enterprises. This is a very huge and a massive opportunity available today to every supply chain financing uh, uh, organization that is there, right? So key supply chain financing challenges across the spectrum that we have noticed is there is obviously an inadequate coverage. We can talk about $43 billion vis-a-vis $57 billion. There are very high servicing costs as well, because people don't know what is the will they be able to get the credit back or not. So there are multiple servicing challenges that are there. So the cost of servicing is very, very high. In fact, even after servicing, we have realized that there is a very poor utilization of that credit as well. So if the utilization is not proper, I mean, no bank or FI would want to do it, right? So, and utilization of that credit is also very important. The other thing that we have realized as a challenge for supply chain financing is poor digitization. Until and unless the entire spectrum from a corporate to a micro enterprise is digitized in terms of their invoicing happening at a particular place, their financing of that particular invoice happening at a particular place through a digital mode. If until unless there is a poor digitization of the entire supply chain, that supply chain financing would not really work. That is a very key challenge that we have noticed in the past many years that we have been in existence. Now, how do we solve the supply chain issues that we have talked about, right? So today there is a very poor trade data that is available, right? Now people don't know what exact how many numbers of invoices are being created, what is the what's the transportation happening like, and all. So the basically the trade data that is very important for making any kind of a decisioning, that is very poor as of now. If the trade data improves, I think the supply chain financing would work very well. As I said, the servicing costs and acquisition costs are very, very high. If we kind of resolve these servicing costs, digitization, poor digitization and acquisition costs, I think the entire supply chain financing problem can be mitigated, at least in India. Today, there is a very high interest to margin ratio as well. The margins are very poor, very thin, but the interest rate of financial institutions is very high. If that can also can be mitigated, I think the problem that today India is facing in terms of $57 billion of per month unmet financing, I think that can be definitely be met. So if we solve these problems, if we basically understand these problems and then solve these problems, only then we'll be able to do a very good supply chain financing. Now, on supply chain financing, what we have realized that the analytics and the trade relationship is very important, right? Today, we understand supply chain financing like a supplier providing it to manufacturer, and manufacturing providing it to distributor, and distributor providing it to a end customer. So now, but or to a retailer, and retailer providing it to a customer. But then there could be an intermingling of the relationship also. One supplier can provide it to other manufacturer, manufacturer can provide it to other distributors. So this intermingling is very important, and we have to understand the entire trade relationship. Once we understand the entire trade relationship, the financing for this becomes very easy. Today, any supply chain financing platform must discover the new connection between an existing supplier and an existing buyer, and the different intermingling of the relationship, and then add financing flows for each and everything, right? Each and every flow. So the most important thing today is that trade information is required, and that trade information is very important for mitigating any kind of risk, that credit risk or any kind of risk that is involved. So if we understand this relationship, we start creating analytics around these relationships, then only supply chain financing is possible for these manufacturers, suppliers, distributors, and retailers. So now, today, for an small and medium enterprises, managing a receivable and managing the payable is very, very big struggle. It's a struggle for every business. So today there are payment delays leading to stretched capital cycle. There are high processing costs due to non-electronic methods that we just spoke about. There are manual and broken processes due to which there is a lack of automated solutions as well. So there are cumbersome reconciliation process because there are disconnected ERP and banking. The ERP that is being used by the buyer is very different from the sellers. So there is no connection between these ERPs. The banking is also very difficult. Somebody is using connected banking, somebody is using very traditional banking. So all these disconnections are also a big reconciliation issues that any business today is facing in India. We've also realized that restricted payment options are also kind of adding up to the problems of any business. The collections are very slow because the banking is not connected. If the banking would have been connected, the collections would have been very fast. If the collections are very fast, the entire supply chain gets an advantage because of that. Today, people or the small and medium enterprises don't have any visibility of transactions that they are doing. There is no 360 degree view of their business that a CFO or a owner of a company has. There is a very lack of control over the accounts payable that they have. Somebody would say that I'll pay in 45 days. They are not able to keep up their promises. So these account payables management is also a big or a key issue that small and medium enterprises are facing in India. Also, the last and final point is the lack of relevant working capital products that are there in India. As of now, the working capital products that are there in India are asset based, right? There are very less products which are invoice based. So once that invoice based financing starts or kind of increases in number, then I think most of the problems of supply chain today in India or small and medium businesses in India can be solved. Now what's happening right now is majorly the time spent and the effort spent is on things like they are doing the SMEs are doing transactional follow-ups and reminders, right? That's taking most of their time and efforts. They are tracking the collections manually. They're reporting and reconciliation. The reconciliation process is very manual. This it is not automated. But what provides the most value is if we can get a real-time business dashboard which can help you understand the reportings, the reconciliations, what is your accounts receivable, what is your accounts payable, all these things. If they have a real-time business dashboard, that can create most value today as compared to what they are doing today. That would also lead to working capital efficiency for sure. Now, now there is an important point here that everybody or every supply chain financing provider or a bank or a neo bank, everybody needs to understand the complete ecosystem of SMEs, and they have to think it through. They have to understand the problems and mitigate those problems through digital features that they can provide. So, if I talk about receivables, right? Uh, uh, we can provide a pre-integrated payment processor for digital collection, right? So you just send a link and you can collect a payment. There could be an automated reconciliation, right? So through a virtual account you can automatically reconcile this amount is coming from which customer, and so on and so forth. There could be automatic reminders through SMS, WhatsApp, email, or through payment links also. So these auto reminders actually help you do your AR management. There could be invoice and field collections tracking that could create an end-to-end audit trail as well. So that's a solution that you can have on the receivable side. If you talk about the payable side, uh, it could be individual and bulk payouts that can be done through two-factor authentication, so that it is very safe to do the payouts to your suppliers. Your salary and vendor payments can be automated. Your there could be a digital ledger to track all your payments that you've done up till now, and you can do it on a real-time basis. All your utility bills, your government tax payments, etc., can be done through this. So if somebody actually solves these problems through automated reminders, etc., all your working capital issues can be solved. Your new customer acquisition can be solved. Your connected banking problems can be solved. Your insurance, saving, investment offering, everything can be solved through these things. And to on the top of it, I think tracking and analytics is very important. A real-time financial insight, if somebody can provide on the supply chain, whether who's my best supplier, who's my best customer, who's paying me on time, who's not paying me on time, all these problems can be solved through tracking analytics. So a tracking analytics engine, a receivables engine, a payables engine, and finally a financial marketplace wherein you can get your insurance, your loans, etc. If we anybody thinks it through on all these four or five aspects, I think most of the issues can be solved through these things. Now, what today we do is on the supply chain financing we have already discussed, but there is a supply chain service aspect as well. Today there is something called GST filing that everybody has to do. If I talk about the ecosystem of GST filing, there's something called e-way bill, wherein all the transportation that you're doing that has to be covered by a bill which we call it as e-way bill. All your invoices have to be electronically filed, called e-invoices, and then based on the e-way bill data and e-invoice data, the GST compliance has to be done. So, if I talk about the ecosystem, there is an enterprise or a small and medium business. They talk to an application service provider, which does all these things. The application service provider can talk to the GST network only through a GSP. For example, Vayana, I'm just giving an example. But you can talk to the GST network only through a GSP. Which so basically this is the compliance ecosystem. If the compliance ecosystem is also solved, that would also help in the supply chain financing, because if somebody is doing e-invoicing, you can kind of download that particular e-invoice and also see whether this invoice has or this transaction has actually happened or not. So all these things,
So, yeah, Manish, this is this is a really great picture of the supply chain finance ecosystem. And I think you pointed up to some of the challenges, particularly in the micro SMEs, in serving them, and the using digitalization to help drive down the cost to serve those. I had a quick question. The There's a huge network effect here, isn't there? I mean, because what you mentioned
True.
about even where companies are using ERPs, the ERP of the supplier may not be connected to the ERP
True.
of the buyer,
True.
and so it's starting small is okay, but it really starts to gain momentum when you have more players connected to that. So what are you doing to sort of I don't we don't have a lot of time, but in a nutshell, what are you doing to accelerate that
True.
take up so that it starts to gain that network effect?
Okay. So the essence that we have in our business is that it has to be a network effect, right? We always deal with the large corporates, and the network of that large corporate is used. For example, whatever suppliers they have, whatever tier two suppliers they have, and their end customers, right? So the network effect would happen only when we have the best analytics in place. If you see this diagram, we have GST data that can be downloaded in one click. We can provide comprehensive analytics on the GST data that they have filed. Then a good business score can be created, which can be used for underwriting or last mile transactions as well. So analytics, connected banking, and connecting all your ERPs through one platform. That's what we are doing to kind of
Mm-hmm.
help a large enterprise as well as a very small and medium enterprise to get the advantage of supply chain financing on our platform.
Great. Well, thanks very much for sharing that picture. I think we have a much better understanding of the complexity, but then also what are the possibilities for addressing that complexity with digitalization and APIs. Thanks very much, Manish.
Sure. Thanks, John. I'll just take one more minute to help you understand what we exactly do on the AR AP automation side.
If you have a link, but actually we're running right up against time, so we
Sure.
don't
No, no
even have a
worries. No
minute.
worries. No worries. No worries. No
Okay.
worries. We'll let it be here. Uh, great speaking with you, John. And I hope I was able to cover most of the issues, most of the problems that
Yeah.
people face
Yeah.
in terms of their supply chain financing and supply chain
Yeah.
servicing.
Thanks very much, Manish.